Welcome to the Motley Fool's Crunch Time series, where we scout out a single company from their story to their opportunities and risks. Today, I'm covering Berkshire Hathaway, Warren Buffett's holding company. And Buffett recently announced that he's going to be stepping down as CEO by the end of the year, and he's going to be replaced by Greg Abel. Let's start with Berkshire Hathaway's business strategy. This is an old school conglomerate company. They have everything from insurance to manufacturing, railroads, and even a giant energy business. On top of that, Berkshire Hathaway gets to invest what's called the float. That gives Buffett and team cash to invest on top of what's already on the balance sheet. And that balance sheet has ballooned to $350 billion in cash. So there's a lot of options for the company. But right now, most of that cash is going to be parked in treasuries. But the biggest question about the company's strategy is what's going to happen with the business after Buffett steps away, and how is Greg Abel going to handle being CEO? So where are the growth opportunities? Most of the growth opportunities for Berkshire Hathaway are going to be the same places they've been for the past couple of decades: in energy, manufacturing, and investing that float. Their biggest and most successful investment ever was Apple. That investment began a decade ago and drove that cash balance that we know today. When you have that kind of cash balance, there's also a lot of optionality. That $350 billion could continue to grow as the core businesses spit off cash and the company makes money on treasuries and low interest rate investments. But we could also see Berkshire Hathaway acquire companies. That's how the company has grown to the behemoth that we know today. We also shouldn't overlook the possibility that that cash is just used to return to shareholders through buybacks. That's something that Berkshire Hathaway has shied away from in the past, but given the valuation of the stock today, trading at just 13 times trailing earnings, I think that's a potential opportunity. But of course, with any company, there are risks. Berkshire Hathaway's days of massive gains are likely behind us. It's just simply too big a company to make acquisitions that are going to make a meaningful impact on the income statement and the balance sheet in a short period of time. And with the market trading near all-time high multiples, there's not a lot of yield that Berkshire Hathaway can buy by buying companies opportunistically. So there's a risk that the style and the business models that got Berkshire Hathaway to where it is today just simply aren't going to be the differentiators for the future of investors. So what's my prediction? As successful as Warren Buffett and Berkshire Hathaway have been over the past 4, 5, 6 decades, I think this is going to be a stock that's going to underperform over the next decade or two. Greg Abel is a worthy successor. He's been running the non-insurance business, but the world is no longer leaning to the styles that got Buffett and Berkshire Hathaway to where it is today. And most of their businesses are going to be generating relatively low returns on capital. That's what you're going to get from a railroad business or an energy business today. And without a big acquisition, I just don't see this being a massive outperformer given the size that we have for Berkshire Hathaway today. So to recap, Berkshire is a giant of business, and Warren Buffett is stepping down as their CEO, leaving the reins to Greg Abel and team. The company has $350 billion worth of cash, and if the market falls, this could be an opportunistic buyer of a lot of different businesses around the US and around the world. And without that massive Apple stake that they built in the middle of the 2010s when Apple was trading at a real value, Berkshire Hathaway could have been an underperformer over the past decade as well. So this is a safe company given the conglomerate nature and the businesses that they own, but may not be an outperformer for investors. Now at the Motley Fool, your insights make us smarter. So please comment with your own research and insight about Berkshire Hathaway and tell us what stock you want to see next on Crunch Time. And of course, check out fool.com/invest to get the top 10 stocks to buy right now. Thanks for watching, everybody. We'll see you here next time.